Have you ever considered the future of global power dynamics? Will the United States maintain its position as the world's superpower, or will China eventually supplant it? China was formerly the world's largest economy millennia ago. Several observers believe it will reclaim this status in time, yet a slew of problems bedeviling the Asian behemoth, some of which are self-inflicted, will postpone the day when it overtakes America and reclaims the top spot. So, when will it catch up with us? Join us as we go deeper into the intriguing issue and investigate why many analysts believe that China will ultimately overtake the United States as the leading global powerhouse. According to British consultancy Centre for Economics and Business Research, China's GDP will grow at a 5.7% annual rate until 2025, then at a 4.7% annual rate until 2030. It predicts that China, now the world's second largest economy, will overtake the United States by 2030. Euler Hermes, a credit insurance firm, made a similar prediction. According to state media, Chinese leaders have pushed for the past decade to rely on more value-added services rather than traditional factory exports. The Sino-US trade war, as well as early 2020 workplace closures due to COVID-19, have put additional strain on the manufacturing sector. Foreign multinational corporations have been shifting production away from China in favor of countries with lower labor costs and fewer regulations, such as Vietnam. They hope to avoid another round of factory closures in China as a result of COVID-19 in early 2020 by offshoring to other countries. According to market research firm Hismarket, China's economy will grow from $18 trillion in 2019 to $15.92 trillion in 2020, based on export manufacturing growth and capital for new projects. According to market research firm, the United States GDP in 2016 was around $23 trillion. Analysts anticipate that in 2021, the state, which has already intervened in a number of vital industries such as the internet, will take even more control over these areas in the country, which has already been recognized for rapid economic growth over the last 20 years. Beijing has the money and unfettered domestic political authority to use China's huge public budget to undertake strategic investments in the service of the leadership's national and global ambitions. Denny Roy, senior fellow at Honolulu-based East-West Center think tank, said. China scored 2.98 on the Organization for Economic Cooperation and Development's direct control over businesses measure in 2018, up from 2.45 8 years before, and approaching 3 times the world average. The government's direct control over firms, far above the open economy norm, according to the Atlantic Council's October study, China Pathfinder Annual Scorecard, and reflects China's increased focus on the role of the state in the economy under Xi Jinping. Economists predict that Chinese officials would favor technology as a development engine, particularly hardware that does not require ongoing innovation. According to Zenon Capron, founder of the head of Shanghai-based financial industry research firm Capron Asia, state engagement in the internet sector will not stifle growth in semiconductors and infrastructure software. If the country becomes self-sufficient in terms of technology and then is able to market and export those products and services that are based on the technology, Capron added. According to Capron, the American economy would grow slowly but consistently through 2030. According to Douglas McWilliams, the CBA's founder and executive vice chairman, China has a vast base of engineers, although with less originality than is needed to promote the zany ideas that drive the creation of new technologies. Domestic spending has driven the majority of China's economic growth before 2021, as the country reduced its exposure to the rest of the world in light of the Sino-US trade dispute, according to McKinsey & Co.'s China Consumer Report 2021. According to McKinsey & Co., supply chains have matured and localized, and its innovation capabilities have been enhanced. Analysts believe that this trend will continue despite income losses due to COVID-19 lockdowns in the first year. China's population outnumbers that of the United States by 3.5 times. Despite the fact that American consumers are on average wealthier, in the last 5 years, as China's domestic consumer market has grown dramatically in size, domestic consumption has become a more significant growth driver, said Rajiv Biswas, Asian Pacific chief economist at Hismarket. In mid-2021, Beijing's leadership aims to create more than 11 million new urban jobs while expanding domestic demand and effective investment, according to the official Xinhua news agency. According to the report, these measures are expected to return the economy to pre-pandemic vibrancy. Economists argue that being the world's largest economy does not automatically confer any advantages over others, but countries that rely on the Chinese economy should be aware. According to the forecast, China's GDP will be about 47% bigger in real terms in 2031 than it was 10 years earlier, an average growth rate of less than 4% a year. Its prices will be roughly 30% higher, and its exchange rate will almost be 13% stronger. It is the combination of these three factors, rather than growth alone, that will determine whether China ever becomes the world's undisputed economic heavyweight champion.